Welcome to The Deep Dive, the show that cuts through the noise to get you straight to the most important nuggets of knowledge. You know, in this current crypto cycle, it feels like we're in a bit of an interesting spot, maybe a holding pattern.
Yeah, I see what you mean.
We see all this buzz around meme tokens, right?
Yeah.
And AI projects are, well, they're still kind of trying to find their footing, their real product market fit.
It definitely feels that way.
And honestly, Web3 applications haven't quite hit that commercial explosion yet. It's left a lot of crypto assets, beyond Bitcoin, feeling a bit stuck.
That's a really good point. But Bitcoin, it's fascinating. It's kind of defied that, hasn't it?
It really has.
It's getting close to its all-time highs again. You've got regulated investment channels opening up. Governments seem more interested. The regulatory picture is, well, it's getting clearer, slowly but surely.
Right.
And all that success has created this real demand from investors, people who've taken profits from Bitcoin and are now looking around, scanning the horizon for that next big altcoin play.
Which leads us right to the big question, the one everyone's asking, or at least thinking. What should they buy?
Exactly.
So today we're doing a deep dive into an area that, well, we think is one of the most promising categories out there. Real-world assets. RWAs. I mean, just from a pure business logic view, the value prop seems incredibly clear. And like you said, the regulatory side is improving, especially in the US. It feels like this is where traditional finance really starts to meet blockchain.
It really does. And for this deep dive, we're putting Ondo Finance right under the microscope.
Okay.
They're a major player in RWA. So our mission today is to really unpack their business model, look at their product lineup, which is surprisingly broad college, check out their team's background, which is pretty impressive.
I've heard that too.
See who they're competing against, because that space is getting crowded, and obviously talk about the challenges and risks. And yeah, we'll touch on their token valuation too.
So think of this as your personal shortcut. You, the listener, get to become really well informed on what could be a genuinely transformative area of crypto, where old school finance meets new school blockchain. Let's jump in.
Let's do it.
Okay, so let's unpack Ondo Finance. What's their core mission here? When you boil it down, what are they fundamentally trying to do in this RWA space? What's the big idea?
At its heart, Ondo Finance is building an institutional-grade platform. Its whole purpose is tokenizing traditional financial assets, those RWAs, and bringing them on-chain.
Right.
The goal is really to unlock things like liquidity, transparency, accessibility, stuff that historically was pretty much reserved for the big institutional players.
So making it more democratic.
Exactly, opening it up to a much broader audience, kind of like taking down the velvet rope around traditional finance.
I like that. And they talk about this really ambitious vision. They call it Wall Street 2.0. What does that actually mean day to day? Is it a total replacement or more like an upgrade?
It's definitely an ambitious blend, maybe more of an upgrade or integration. Ondo wants to harmonize the trust and stability we expect from traditional finance.
Sure.
Things like strong investor protection, clear reporting, sticking to regulations. Harmonize all that with the speed, efficiency, and borderless nature of blockchain tech.
So, best of both worlds.
Pretty much. Imagine getting instant settlement, global reach, but still having that familiar, reliable, client-focused feel. They see blockchain as a tool to refine finance, expand access, and ultimately make it more democratic.
That's a really interesting way to frame it. So how are they actually set up to do this? Do they have different teams handling different parts?
Yeah, they do. It seems quite logical, actually. They mainly operate through two core divisions.
Okay.
First is asset management. These are the folks designing and managing the tokenized financial products themselves.
Makes sense.
And second, you've got the technology development side. They're building the decentralized protocols, the tech infrastructure that makes it all work, ensures it can scale, and plugs into the wider DeFi world.
So clear separation. Asset people and tech people.
Right. Very intentional.
That structure definitely suggests they're thinking about the whole picture. And speaking of the whole picture, they're not just doing one thing, are they? They have a whole range of products.
Oh, absolutely. Not a one-trick pony at all. Their offerings cover three main areas: asset products, protocol products, and infrastructure products.
Oh, okay.
Yeah, it's this comprehensive suite that basically covers the entire RWA value chain, from issuing the assets and holding them securely right through to trading them and making sure there's enough liquidity. It's pretty well thought out.
Okay, let's start where it gets tangible.
Yeah.
The asset products. This is them bringing traditional yields onto the blockchain. First one up, OUSG. What exactly is that?
Right, OUSG. That stands for the Ondo Short-Term U.S. Government Bond Fund. Essentially, it's a token, and it's backed by short-term U.S. Treasury securities.
Okay, straightforward enough.
But it's designed specifically for what are called qualified purchasers.
Ah, okay. So not for everyone. What does that mean, qualified purchaser?
Yeah, exactly. For listeners who aren't familiar, a qualified purchaser usually means an individual or an institution with a pretty high net worth or significant investments, often like $5 million or more in investments.
Right, so serious players.
Serious players, yeah. And it involves strict KYC, know your customer, and accreditation checks. Standard stuff in TradFi for compliance and making sure investors are suitable.
Got it. And how does the token itself work?
So the token's value, its intrinsic value, goes up with the net asset value, the NAV of the underlying fund. It basically compounds interest daily right there on the blockchain for the token holder.
And what's actually in that underlying fund? Is it just one thing or?
No, it's diversified, which is really important. The assets underneath include BlackRock's BUIDL, U.S. Treasury Fund. That's a big one. Gives it credibility.
Yeah,
but also allocations from other big names like Franklin Templeton's FOBXX Fund, Wellington, Wisdom Tree, Fidelity. So it's a mix of institutional grade funds.
So they're leveraging established players. And how does Ondo make money from OUSG?
They charge a 0.15% management fee, although that's actually waived right now until July 1st, 2025. But they also have a 0.15% fund expense fee, and that one is being charged currently.
Okay. Interesting fee structure. All right, next asset product, USDY, the US dollar yield token. Sounds like a stable coin to one that pays you interest.
It is, yeah. And that interest part is the key difference. USDY is a yield-bearing stablecoin. Importantly, it's issued specifically to non-US individuals and institutions.
Ah, okay. So outside the US only.
Right. And it's backed by the interest earned from short-term US Treasuries and also some bank deposits. But the really unique thing is how the interest works. It accrues daily, and that value is reflected directly in the token's price.
So the token itself just slowly creeps up in value. You don't have to stake it or anything?
Exactly. No staking, no locking required. Your token balance, or rather the token's value, just grows over time as it earns that yield.
Neat. And Ondo's cut on this one. How do they generate revenue?
Good question. They retain about 0.5 percentage points from the yield as their management fee. So let's say the yield for a month is, 4.25%. Ondo keeps 0.5% of that.
Okay, simple enough.
And it's worth mentioning both OUSG and USDY also have these things called rebasing versions.
Rebasing, like Steve.
Exactly like Lido Seat. They're called OUSG and RUSDY. With these, the token keeps a stable value like $100 or $1, but your actual balance of tokens increases as the yield comes in. Same outcome, just a different mechanism.
Okay, interesting. So given that both OUSG and USDY are tied to US Treasuries in some way, why have two separate products? It seems like there must be a strategic reason. They sound like they serve quite different needs.
They absolutely do. And this is where you really see Ondo's kind of dual strategy playing out. It's clever, really. They're not trying to make one product fit everyone.
Right.
They've carved out two distinct paths. Let's start with what's actually backing them, the asset composition. OUSG invests indirectly. It goes through multiple regulated government bond funds, like we mentioned.
Okay.
This gives it diversification and pure government credit risk. Very clean from an institutional perspective.
Right. And USDY?
USDY uses a direct holding strategy. It holds treasuries directly, but also includes more bank demand deposits.
Okay, so a bit different risk profile.
Yeah, it introduces a small amount of bank credit risk, though they mitigate that by over-collateralizing it by 3%.
So OUSG is aiming for that institutional purity, strict compliance, while USDY has a slightly different mix, maybe for broader appeal or different risk tolerance outside the US.
You're hitting on the key differences. Now think about liquidity and how you get your money back. OUSG offers instant subscription and redemption for those qualified purchasers.
Okay, quick in and out for institutions.
Right. But the secondary market, where you might trade it peer-to-peer, that's permissioned. Restricted only to other whitelisted wallets. Keeps it compliant.
Makes sense. And USDY?
USDY is different. After an initial 40-day lockup when you first get it, it becomes freely tradable on secondary markets. And actually, that secondary market trading is often how people prefer to get in and out rather than going back to Ondo for fiat redemption.
So much more open circulation for USDY.
Exactly. And the last piece is the denomination. OUSG has a $100 base value better for big institutional trades. USDY is a $1 unit perfect for everyday use, open circulation.
Okay, so the bottom line seems pretty clear then. USDY is really built for the wider world, non-US retail and institutions, a yield-bearing stablecoin for open use. While OUSG is laser-focused on instant liquidity in a permission-compliant environment, targeting those big institutional players as a tokenized share of a fund.
That sums it up perfectly. It's a really sophisticated way to capture both major market segments and deal with different regulatory needs at the same time.
Okay, so we see how they're bringing these traditional assets on-chain with different flavors for institutions in the global market. But what happens next? How do these tokenized assets actually work in the crypto world? That takes us to their protocol products, right? Starting with Flux. How does that fit in?
Right, Flux. So Flux is a decentralized lending protocol. If you're familiar with DeFi, think Compound V2, it's built on that style of asset pool model.
Okay, like a money market.
Exactly. Users can supply high-quality RWA. Right now, it's only OUSG as collateral.
Ah, okay. So you put up your OUSG.
And then you can borrow stablecoins against it, things like USDC, DAI, USDT, FRAX, or you could be on the other side lending out your idle stablecoins to earn interest from the borrowers.
So it lets OUSG holders get liquidity without selling their underlying tokenized bonds. That's pretty useful.
Very useful, but crucially, it has permission controls built in.
Yeah.
Because OUSG itself is restricted, only whitelisted addresses can actually use it as collateral on Flux. Keeps everything compliant.
Gotcha. And who runs Flux? Is it Ondo directly?
It's governed by the Ondo DAO, so ultimately the Ondo token holders have control over the protocol.
And how big is it right now?
Currently, it's got about $74 million in deposits and around $33.43 million in borrowed funds. Its growth, though, is kind of tied to OUSG right now, since that's the main RWA collateral. It really needs more tokenized RWAs to be onboarded to scale significantly further.
Right, makes sense. Okay, next up, Ondo Global Markets, or GM. This one sounds massive, even for a Wall Street 2.0 vision. What's the plan here?
Yeah, the scope for GM is huge. They unveiled it back in February 2025. The idea is to tokenize potentially thousands of publicly traded securities.
Like stocks, bonds, ETFs.
All of the above. Stocks, bonds, ETFs, bring them all onto the blockchain. And it's primarily aimed at non-US investors again.
Why do that? What's the benefit?
The vision is to tackle those classic TradFi problems. High fees, limited access, especially across borders, liquidity being fragmented and only available during market hours. So GM aims for lower costs, 247 trading, and instant settlement using blockchain. Imagine buying a token representing Apple stock just as easily as you trade crypto today.
Wow. But is it live yet? This sounds like a huge regulatory and technical lift.
It's not fully launched yet, no. It was officially announced, but the full launch is still pegged as expected later this year.
Okay.
A lot depends on getting clear regulatory guidance, especially from the US. And it's planned to operate on Ondo Chain, their own blockchain, which we should probably talk about too.
We definitely will. But first, there's one more protocol product. Nexus Asset Issuance Protocol. That also launched in February 2025. What gap does Nexus fill?
Nexus tackles a really specific but important problem. Instant liquidity for third-party tokenized U.S. Treasuries.
Okay, so not just Ondo's own OUSG, but tokens from other companies?
Exactly. It uses OUSG itself as a kind of shared liquidity layer, almost like a central bridge. So Nexus can accept Treasury tokens issued by other big firms, if specifically mentioned, Franklin Templeton, Wisdom Tree, Wellington.
Wow, okay, those are major players.
Right. And it allows investors holding those other tokens to convert them into OUSG or into stablecoins instantly, 24/7.
That seems huge. Because normally redeeming those things is tied to traditional market hours, right? Weekdays only.
Precisely. It brings real-time, round-the-clock liquidity to an asset class that's usually stuck in that 9 to 5, Monday to Friday world. And of course, it really strengthens Ondo's position as a partner and connector with these major TradFi asset managers.
Yeah, it really positions them as a central hub in that whole tokenized treasury ecosystem.
Absolutely, a core liquidity coordinator.
Okay, that paints a really clear picture of their products: asset layer, protocol layer. Now let's get down to the foundation. Their infrastructure products. And the big one here is Ondo Chain. They're actually building their own layer 1 blockchain. That sounds like a massive project.
It is a massive undertaking, yeah. But strategically, it makes a lot of sense given their focus on institutions and compliance.
How so?
So Ondo Chain, which they also announced in February 2025, is designed as a semi-permission layer 1.
Okay, unpack semi-permissioned layer 1 for us.
Sure. Layer 1 is the base blockchain network, like Ethereum or Solana. But semi-permission means it tries to blend the transparency you get with public blockchains with the security and compliance controls you need for regulated assets, like in private networks.
So readable by anyone, but maybe not writable by just anyone.
Kind of. The key is who runs the network, the validators. It uses proof of stake, like many modern chains. But uniquely, Ondo Chain allows highly liquid real-world assets, think OUSG, to be staked alongside crypto assets. The idea is this might help reduce the impact of crypto market volatility on network security.
Interesting concept. And who are these validators?
Yeah.
I guess they need to be highly trusted, right?
Exactly. The plan is for validators to be licensed, reputable financial institutions. The list of potential partners they've mentioned is, frankly, stunning. You've got the TradFi giants like Franklin Templeton, Wellington, WisdomTree.
Wow.
Tech players like Google Cloud, big financial service firms like ABN, AMRO, Aon, even the consulting firm McKinsey.
That's quite a lineup.
It really is. The whole design philosophy is about getting that public transparency, but embedding the necessary compliance and security right into the base layer.
So it's built from the ground up for finance.
Pretty much. It's designed with native support for financial operations that are complex on general purpose chains. Things like handling dividend distributions, stock splits automatically. It'll have on-chain proof of reserves for transparency and access controls built into the smart contract level for compliance.
So the big vision is this becomes the foundational railroad for Wall Street 2.0.
That's the aspiration, the infrastructure layer where advanced financial operations happen seamlessly on-chain. It's slated to hit testnet sometime in 2025. And there are already reports or maybe rumors of collaborations being explored with giants like PayPal, Morgan Stanley, and BlackRock for using the chain.
Okay, that is a truly comprehensive picture of their products and infrastructure. It's impressive. Now let's shift gears a bit and talk about the pillars supporting all this. What gives Ondo its strength? First off, their team. I heard their backgrounds are, well, not typical for crypto.
That's putting it mildly. They are genuinely impressive. The core team is largely drawn from big Wall Street institutions and top-tier consulting firms. There's a significant group that came over from Goldman Sachs's digital assets division.
Like who? Any key names?
Yeah, for instance, Nathan Ullman, the co-founder, he was at Goldman. Justin Schmidt, who's president and COO, was actually the head of digital asset markets at Goldman Sachs.
Wow.
Then you have Ian DeBode, the chief strategy officer, formerly a partner at McKinsey. Mark Danoff, chief legal officer, Stanford law grad. It's a team stacked with deep expertise in traditional finance, compliance, and navigating government relations.
That kind of background must be absolutely critical for operating in this space, right? Dealing with regulations, institutions.
And it's invaluable, crucial even. And they're not just sitting on those resumes, they're actively using that experience. They're engaging directly with regulators. Well, for example, back in April 2025, the Ondo team actually met with the US SEC's Crypto Asset Working Group. They weren't just listening, they were proposing detailed compliance frameworks for tokenized securities. They even suggested ideas like regulatory sandboxes to let innovation happen in a controlled way.
So they're actively trying to shape the rules of the game, not just waiting for them.
Exactly. Proactive engagement. And they're doing public advocacy, too. They hosted their first big Ondo summit in February 2025.
Right, I heard about that. Who was there?
They had some really notable speakers. Patrick McHenry, who used to chair the House Financial Services Committee, a very influential figure in crypto legislation.
Yeah, huge name.
And Caroline Pham, who's a current CFTC commissioner. Having officials like that speak lends a lot of legitimacy.
Definitely.
And then, in a move that really raised eyebrows, Patrick McHenry himself actually joined Ondo Finance's advisory board as vice chair shortly after that summit in early 2025.
Wow, that's a very strong signal, almost like an inside track.
It certainly strengthens their government relations capacity significantly. And there was another interesting connection at that summit, too, wasn't there? Involving Donald Trump Jr.
Oh, yeah, that was unexpected. What was that about?
He made a surprise appearance, gave a speech, and then afterwards, Ondo announced a strategic partnership with a crypto platform called World Liberty Financial, or WLFI.
Okay.
WLFI is reportedly supported by the Trump family. The partnership is aimed at promoting RWA adoption together. WLFI apparently plans to integrate Ondo's tokens, like OUSG and USDY, as reserve assets for its platform.
So more about expanding reach, getting endorsements, commercial alignment.
Yeah, it seems largely like a promotional and business development play.
Yeah.
Tapping into different networks.
All right, so strong team, proactive regulatory engagement. Let's look at the numbers. How are they actually doing in terms of business metrics as of, say, May 2025? How's OUSG looking?
OUSG is doing pretty well. Total assets are around $545 million, and that's shown some rapid growth, especially since February 2024.
Okay, where is it mostly held?
It's available on Ethereum, Polygon, and Solana, but the vast majority, like almost all of it, is on Ethereum. And interestingly, it's super concentrated. Only 57 addresses hold OUSG, and the top 10 hold over 90% of the total supply.
Wow, really underscores that institutional focus, doesn't it?
Absolutely. Very different picture for USDY, though.
Right, USDY is a global retail play, so different metrics there.
Completely different. USDY has a slightly larger total asset value, around $634 million, and it's spread across 8 different blockchains, so much wider reach.
And the holder distribution.
While Ethereum still holds the biggest chunk of USDY market cap, about $330 million, Solana actually shows much higher retail adoption. Over 6,300 addresses hold USDY on Solana, even though the market cap there is smaller, around $177 million. It really shows that broader, more retail-oriented appeal.
Interesting contrast. And Flux, the lending platform, how's that doing?
Flux, as we mentioned, has about $74 million in deposits and $33.43 million in borrowed funds. Its scale is still somewhat limited because it currently only accepts OUSG as collateral.
Okay, so when you pull all this together, the team, the regulatory moves, the products, the metrics, what is Ondo's real strategic edge here? What makes them stand out?
I think Ondo has been really clever about leveraging, let's call them indirect endorsements, alongside direct partnerships with financial giants.
What do you mean by indirect endorsements?
Well, using BlackRock's BUIDL fund as a core underlying asset for OUSG, that immediately borrows BlackRock's brand prestige and signals institutional seriousness.
Right, instant credibility.
Exactly. Then you have Franklin Templeton and Wellington directly participating in the Nexus protocol. That's a direct collaboration. PayPal using its stablecoin, PYUSD, for OUSG redemptions is another integration. MasterCard invited Ondo into its multi-token network pilot program.
So they're weaving themselves into the fabric of both TradFi and emerging fintech.
Precisely. They're not trying to build everything in a silo. They've strategically positioned themselves to connect upstream to traditional asset managers for getting assets and that brand halo, and then connect downstream to the crypto markets for users, liquidity, and DeFi integration. The whole approach seems designed to open up the RWA market faster than competitors who might be trying to go it alone.
That sounds incredibly smart, very well positioned, but of course, no ventures without risk. The RWA space must be getting competitive. How does Ondo actually stack up against others, and what are the biggest hurdles they need to clear?
Oh, the RWA space is definitely heating up. Competition is getting fierce. If you look at the data, say from RWA.xyz as of May 2025, for U.S. Treasury-backed RWAs, Ondo is actually ranked second in terms of total locked assets. They have about $1.17 billion, which is roughly 17% market share.
Who's number one?
Securitize. They're significantly larger right now, around $2.9 billion in assets, giving them over 42% market share. And notably, Securitize is backed by BlackRock.
Ah, the BlackRock connection again. But wait, I remember hearing something about holder count. Didn't Ondo lead there, even if Securitize has more assets locked?
You're absolutely right, and that's a really critical point that highlights their different strategies. Despite being second in lock assets, Ondo massively leads in the actual number of token holders.
How much?
They account for something like over 90% of all holders of U.S. Treasury tokens across the entire market.
Wow. Why the huge difference?
It comes down to USDY. Its accessibility to non-US retail investors means lots of smaller holders. Securitize, on the other hand, is much more focused on larger institutional clients and operates within its own licensed system, leading to fewer holders but much higher average holdings.
So different target markets, different distribution. How else do their products really differ from competitors? Like Ondo versus Securitize, what's the core difference in approach?
Ondo's big push is integrating these highly liquid USD assets, like OUSG and USDY, directly into public DeFi ecosystems. They're leading the pack there, with integrations into over 80 different multi-chain applications. Plus, they offer that 247 instant minting and redeeming for OUSG, which is a big deal for DeFi composability.
Okay, and Securitize?
Securitize is definitely a powerhouse, and they have direct U.S. financial licenses, which is a major advantage. But their focus seems more geared towards their own license platform, their ATS alternative trading system. They're generally less deeply embedded within the broader permissionless DeFi world compared to Ondo.
Got it. What about other RWA names people hear about, like Centrifuge or Polymesh? How do they compare?
They're playing different games, really. Centrifuge is focused on a completely different type of RWA, private credit.
Like loans and invoices.
Exactly. Things like invoice factoring, real estate bridge loans, even mortgages. These typically offer higher potential yields, but come with higher risk and much poorer liquidity compared to treasuries. So different target investor, someone chasing higher returns and comfortable with illiquidity.
Okay, so not direct competition for Ondo's core treasury products.
Yeah.
And Polymesh.
Polymesh positions itself as a specialized blockchain specifically built for securities tokens. But frankly, the actual volume of assets issued on Polymesh has been relatively limited so far. And it's pretty telling, I think, that major institutions like WisdomTree, who could have potentially used a chain like Polymesh, instead chose to partner directly with Ondo, collaborating on Nexus and advising on Ondo Chain's design.
Yeah, that suggests they see more value or a better fit in Ondo's approach right now.
It certainly seems that way. It signals confidence in Ondo's model of integrating with existing infrastructure and DeFi, rather than requiring everyone to move to a completely separate, dedicated securities chain.
And what about compliance? That must be the elephant in the room for everyone. Do they tackle it differently?
Hugely different approaches, actually.
Yeah.
Ondo uses what you could call a registration exemption plus offshore issuance model. OUSG is structured under exemptions like Regulation D as a private security for accredited U.S. investors. USDY is specifically issued offshore, targeting non-U.S. persons. They achieve this largely through partnerships and careful structuring.
Okay, and securitized.
The securitizers approach is different because they hold multiple direct U.S. financial licenses themselves, including broker-dealer and transfer agent licenses. This gives them direct regulatory standing to handle securities transactions within their own ecosystem.
So different paths to compliance. Both face regulatory risk, though, right?
Absolutely. That regulatory policy risk is a fundamental challenge for everyone in the RWA space right now. Ondo's strategy seems to be navigating existing frameworks carefully and maintaining open dialogue with regulators, emphasizing transparency. Securitize relies more on its license status. Both are valid, but the overall uncertainty affects them all.
Okay, so looking ahead specifically for Ondo, beyond just the general competitive pressures, what are the biggest internal challenges or risks they need to manage?
I see a few key ones. First, that intensifying competition isn't just from other crypto projects. While Ondo might have an edge there currently, the real threat comes as the big TradFi institutions themselves enter the RWA space more seriously.
You mean like BlackRock, Franklin Templeton, etc., building their own platforms?
Exactly. They have massive resources, existing client bases, and strong incentives to control their own RWA ecosystems rather than just relying on third-party platforms like Ondo indefinitely. Ondo is competing, in a sense, with its own potential partners or even suppliers. That's a tough dynamic.
That's a really critical point. The hand that feeds you might also compete with you. What else?
Second is product delivery and execution risk. As we've discussed, Ondo's most ambitious infrastructure, Ondo Global Markets for tokenized securities, and Ondo Chain itself aren't fully launched yet.
Right, still on the roadmap.
Yeah. Their current products, OUSG and USDY, are effective but relatively straightforward compared to tokenizing thousands of stocks or running a whole new Layer 1 blockchain. There's always uncertainty about whether they can actually build, scale, and maintain compliance for these much more complex systems under real-world pressure and scrutiny. Execution is key.
Absolutely. Vision is one thing, making it work reliably at scale is another, and the third risk.
Third is that persistent regulatory uncertainty we touched on. The lack of a clear, comprehensive crypto regulatory framework in the U.S. creates ongoing ambiguity. Legislative efforts stall, like the Genius Act related to digital assets getting rejected. Upcoming elections could shift priorities. This lack of clarity makes long-term planning difficult and could suddenly change the viability of certain business models.
So external regulatory winds could really impact them. What about risks related specifically to the Ondo token itself, for holders or potential investors?
Yeah, there are definitely token-specific risks to be aware of. One major one is an inflationary pressure.
Meaning more tokens coming onto the market.
Exactly. Right now, the circulating supply of Ondo is relatively low, only about 34% of the total potential supply. Projections suggest the supply could inflate by as much as 64% over the next year as more tokens unlock from vesting schedules for the team, investors, ecosystem funds, etc.
That sounds like significant potential sell pressure.
It is. More supply hitting the market generally puts downward pressure on the price, all else being equal. So that's something holders need to watch.
Okay. What's the other main token risk?
The other one is, frankly, unclear value capture for the token itself.
What do you mean by that? It generates revenue, right?
The platform generates revenue, yes, through the fees on OUSG and USDY, but the Ondo token itself currently only offers governance rights. Holders get to vote on proposals related to the Ondo DAO and protocols like Flux.
But no direct share of the revenue.
Not currently. There's no defined mechanism for sharing protocol fees with token holders, no automatic buyback and burn program funded by revenue. Nothing like that is currently implemented or officially confirmed.
So it's mainly a governance token right now.
Pretty much, which raises legitimate questions about its long-term value accrual. If the platform becomes hugely successful and generates significant revenue, how does that value flow back to the Ondo token holders beyond just voting rights? That link isn't clear yet.
That seems like a pretty fundamental question for valuation.
Yeah.
So speaking of valuation, let's talk about where Ondo is trading now, around May 2025. What does its price tell us?
Okay, so as of around May 11th, 2025, Ondo's circulating market cap, the value of the tokens actually trading was roughly $3.27 billion.
Okay.
But its fully diluted valuation, or FDV, which is the theoretical market cap if all 10 billion tokens were circulating, was way up around $10.3 billion.
10 billion FTV. How does that compare to other RWA projects?
It significantly outpaces them. It's much higher than the valuations for tokens associated with Securitize, Centrifuge, Polymesh, etc., at least based on circulating market cap and especially FDV.
That seems really high, especially given the product still in development, the unclear token value capture, the inflation.
Fundamentally, yes. By almost any traditional metric, the valuation looks obviously very high, as some analysts might put it.
Can you put some numbers on that, like a PE ratio?
Well, estimating precisely is tricky, but based on the current revenue from OUSG and USDY fees, which is likely under $10 million annually right now, the static price to earnings ratio, just based on circulating market cap, is probably well over 300x.
300x? Wow.
And if you calculate it based on the FDV, you're looking at a PE ratio easily exceeding 1000x. These are extremely high multiples, especially when compared to traditional financial firms or even many growth tech stocks, and doubly so given the lack of direct fee sharing to the token.
So why? Why is the market giving it such a massive valuation? What's the story the market is buying into?
It really boils down to an extremely optimistic growth premium. The market isn't valuing Ondo based on its current earnings. It's placing a huge bet on its future potential.
The Wall Street 2.0 narrative.
Exactly. The market seems to be pricing in the possibility that Ondo achieves massive scale, hitting that $10 billion or more in total value locked, TVL, within the next couple of years, successfully launching Ondo Chain and global markets, expanding into tokenized equities and other complex assets.
So basically, assuming they execute perfectly on their entire ambitious vision.
Pretty much. The bet is that if they achieve that scale, their revenue could increase by an order of magnitude or more, which might eventually justify today's valuation. That powerful Wall Street 2.0 on-chain narrative allows it to be valued more like a foundational Layer 1 blockchain with huge potential, rather than just an asset management platform. But it's definitely pricing in a lot of future success and carries considerable uncertainty.
It sounds like it's priced for perfection then.
Yeah.
So what are the key things you'll be watching? The signposts that tell us whether Ondo is actually delivering on this huge potential, or if the market's optimism was maybe a bit too early?
There are definitely critical milestones to watch. On the project development side, it's all about execution now.
Like what specifically?
We need to see Ondo Chain actually launch its testnet and then mainnet successfully. We need to see Ondo global markets move from announcement to a real functioning platform, even if starting small. We need to see them onboard more RWA asset types beyond Treasuries. And crucially, can they continue to deepen those institutional partnerships and significantly grow the asset scale, the TVL, for OUSG, USDY, and Flux.
So concrete product launches and scaling metrics. What about the external factors, the things outside Ondo's direct control?
Externally, the big things are regulatory progress in the U.S.
Yeah.
Will we see actual legislation clarifying the rules for asset tokenization? What stance will the SEC take? Will they be open to those sandbox ideas Ondo proposed, allowing for more innovation? That regulatory climate is huge.
Makes sense.
And maybe the biggest external question: how did the TradFi giants ultimately play their hand in RWA? Do they decide to build their own competing platforms from scratch? Or do they choose to partner more deeply or even acquire well-positioned players like Ondo? That strategic decision by the incumbents could dramatically reshape the landscape.
That's the multi-trillion-dollar question, isn't it? How TradFi really embraces this.
It really is. That dynamic will be fascinating to watch unfold.
Well, this has been an absolutely fantastic deep dive into Ondo Finance and the whole RWA space. It's really clear they have this incredibly ambitious vision, bridging TradFi and DeFi, building that Wall Street 2.0 on-chain with a strong team and a comprehensive product plan.
Indeed, it perfectly captures that ongoing complex dance between financial innovation and regulation. It's a dynamic that's going to define so much of the future of finance. The RWA sector is truly a frontier, and Ondo is without doubt one of the most compelling projects pushing that frontier forward.
Which leads us perfectly into our final provocative thought for you, the listener, to chew on. As these massive traditional finance institutions inevitably move deeper into blockchain, what does that actually mean for innovative, well-positioned startups like Ondo? Will they manage to stay leaders in their niche? Will they become essential partners, integrated into larger ecosystems run by the giants? Or could they face being overshadowed, acquired, or even outcompeted by the sheer scale and resources of TradFi entering the game directly? That's where things get really interesting, and the whole future of tokenized real-world assets kind of hangs in the balance.
A lot to think about there.
Absolutely. Thanks for joining us on the deep dive. We really hope you feel much more informed about Ondo and this pivotal RWA space. We'll catch you next time for another deep dive.